All right. All right. Good morning, everyone. Thank you for joining us for our webinar this morning. Today, I'd like to introduce you guys to First American, who I'm sure many of you already know. This webinar today is going to be on 2017 fraud trends and techniques, and it will feature Matt Merlone, who is the AVP of Product and Fraud Strategy at First American. He is a certified fraud examiner. He is an expert in this area and has been doing this for many years. So we'll actually be covering some content that Matt has put together regarding fraud. And then we will also be talking about the new integration that we have done between LendingQB and First American's Fraud Guard product. So today you'll be seeing a lot of stuff, getting a lot of great information from Matt, as well as a couple of his other colleagues that will actually be showing us the integration, describing the product to you. And at the end, we will be providing you with some time to ask some questions. As you know, that this is a webinar. You can't actually ask questions, but you can certainly submit your questions via chat. So just making sure that everyone understands how to use the question panel in the GoToWebinar panel on the side there. As you can see, you can just type in your question or pop out the entire panel, type in a question, and then we'll respond to them at the end of our presentation. So again, I'd like to welcome everyone this morning, and I want to introduce Matt. As you can see, Matt is their AVP of Product and Fraud Strategy. He will be giving us a presentation on 2017 fraud trends. Matt?
Thank you, Lynn. Thank you for the introduction there. For our agenda today, we'll go over a brief overview and kind of talk about what we're seeing from the risk environment today, some observations and trends that we're noting, which we source from Fraud Guard, we source from research and from investigations that we conduct, as well as post-closing quality control reviews. We'll talk about a couple of types of fraud to be on the lookout for and some best practices. And then we'll transition into a discussion about the Fraud Guard tool and the demo, the integration with LendingQB. So without that, let's go ahead and move forward. All right, one more. All right, so like I said, I thought we'd start today with some quick review, and it's always interesting to me to look at the motivations regarding fraud and sort of study the main attributes, because there's a lot of commonalities from one scheme to another, even across different industries, because we know that rarely anymore will a criminal or a fraudster stick with just one vertical. Typically, they're active across a number of different business channels. So if you're lending in different areas and they have some success there, chances are they will try different schemes on the other channels of business as well. But the common elements are usually pretty easy to spot. We have the intent to defraud, so we're disguising the purpose through manipulation, falsifications, whatnot. We sometimes rely on the ignorance of the victim. Sometimes we make it too easy for the fraudsters. Sometimes they're within our own industry, and that makes it difficult. Sometimes there are voluntary victim actions that end up assisting the fraudster in carrying out a scheme. They may be unintentional, they may be complicit, but there's almost always that attempt to conceal what's been done. And then, of course, it's the final stage there would be the conversion, either through money laundering or moving the assets, reselling the properties, and so on. Next slide, please. All right, so when we look back at the way psychologists look at financial crime, back in 1978, they had this, what they called a fraud triangle, which is essentially made up of three components: pressure, rationalization, and opportunity. And these were the factors that would lead someone to commit a crime, a financial crime, generally against their employer. And the only thing that we've ever really had the ability to deny there was the opportunity. You can't really take away someone's financial pressure perhaps that they're feeling, or rationalization that they might see that it's okay to commit a fraud. The only thing we could do is be vigilant and stay on guard and limit the access or opportunity. But in 2004, the psychologists and criminologists had to come up with a different take on that fraud triangle. They had to update it because what we saw in the sort of the Wild West woolly days of 2004 in mortgage lending was that not just anyone could come in off the street and commit a fraud in a real estate transaction. It takes a certain amount of savviness, capability, and competence. So they added that then into the fraud triangle and started calling it the fraud diamond. And then this has even further been perfected to where we see schemes today like Enron, like Bernie Madoff, where there's an arrogance or an elitism that also permeates some of these frauds. Next screen, please. All right, so there's a couple of different ways to educate yourself about what you're seeing in fraud and where your risks are lying. The first of which is what I would call scholarship. So you can consume the white papers that are out there. The government does a good job. The FBI, FinCEN, they put out good reports. MBA does a good job. ABA does a good job with industry conferences. There's a bunch of good fraud blogs out there and news stories. One of my preferred methods of getting information around what is going on today with techniques and trends are looking at indictments and looking to see what our tools have caught this type of fraud. What did they do? What were the actual mechanisms of the fraud? And then just looking at the market and talking with other risk professionals. That's the first way we would come about an understanding of mortgage fraud. The other is what are we actually experiencing today from our operations? What do we find when we conduct investigations? The way FraudGuard works as a pre-funding QC automated tool, we can compare that to post-closing quality control. We can look at denied loans. Oftentimes it's said that if you stipulate and add conditions to loans that you're a little bit on the bubble on, you're a little bit suspicious of, the fraud walks away. Well, if you're not looking at some of these denied and withdrawn loans, you may be missing some attempts to probe your organization there. So it's important to do that. But also looking at loans that are declined and looking at what you're doing in your day-to-day fraud prevention efforts. Go to the next slide, please. All right, so some real basic concepts here in fraud prevention. The fraud scheme is the generalized process or mode of what was accomplished there. I don't spend a whole lot of time focusing on what a particular scheme is called. Sometimes they're misnamed. If you look at reverse occupancy, you could also term that a money laundering scheme, sort of an onshoring of funds, if you will. I try to focus more on the mechanisms of the fraud and actual techniques, or how they perpetrated the fraud. How did they get away with the fraud? How did they perfect the scheme? And so that's what our tools are designed to catch, and that's what I look for when I'm looking at indictments. Next slide. All right, so I'll just give you a real quick breakdown here. Schemes on the left, these are scheme names. On the right, these are mechanisms. And you'll see that there's some crossover there because some schemes take their names from the mechanisms. One in particular, straw buyers. You'll see on both sides, collusion, non-arm's length. These are techniques to perpetrate the fraud. If if you look at something like a builder bailout, that's a very specific type of fraud where a builder may have unsold inventory that they're trying to move, or an affinity fraud where a number of folks are tied together either through some sort of affiliations or religious or employment or education and so on, ethnicity in fact. So those are some of the different types of schemes. But again, I feel it's more important to focus on the particular mechanisms. Next slide. So kind of to complete our picture here of how frauds are carried out, we want to talk a little bit about red flag indicators. And these are areas of consistency that cause the underwriter or processor to kind of raise their antenna. It may not necessarily be proof of fraud, but it's definitely an indicator that you have something amiss or something that's causing you to be suspicious, and it should be investigated. It should be looked at. These red flag indicators are just like compensating factors. The more you have, the more you have a risk layer there. So it's, you know, definitely the red flags that are popping up, and that's, you know, how our tool works. You know, we give you all of the red flags that you should be aware of as the loan is being reviewed. Definitely one of the pillars there for identification of frauds. The other is participant role, and not just participant role from, you know, are they a real estate agent, settlement agent, and so on, but if you uncover a fraud scheme, it's important to understand or at least try and identify who the facilitator, recruiter was, who found the properties, if it's a multiple property fraud scheme. Was it a fraud for housing or was it a fraud for profit scheme? So you want to look to see who was in a position to influence that lending decision. And so that's the other tenet there that I like to look at. All right, so let's move on to the next slide. One more. Okay. What I did here is I pulled down some ads from back in kind of the mortgage crisis heyday, and the only reason I'm going to talk to this a little bit is not to besmirch these organizations, but you look at it and it's kind of recall and kind of stroll down memory lane there. Nothing down, countrywide, yes we can, zero down, zero docs, zero skin in the game, and oftentimes or sometimes at least zero payments. I included this slide as a reminder to watch the marketing efforts around lending in this country. It feels like we're on a pendulum that kind of swings back and forth as it pertains to risk, and we lead the borrowers down that path, right? And so I'm seeing the same sorts of messaging. It's not quite as bad as it was, but it seems to be swinging back towards that more speculative end of the spectrum. And so I kind of wanted to include that there. If you go to the next slide, I'll see why that is concerning to me. So back in the day, we used to see folks that would do novelty pay stubs and novelty bank account statements, and it was something that we saw quite a bit of in that vintage of loans from 2004 to 2010. However, these are ads that are out there currently today for pay stubs and verifications. And the one there at the top that I really like is ability to repay, no problem. But yeah, it's for a novelty purpose, of course. This is concerning to me because they're putting tools in the hands of people who may not be sophisticated enough to know that, number one, it's illegal. Number two, that you're going to end up getting into a property that you can't afford. On the bottom left, there's a ad there for SpoofCard, and SpoofCard is this handy software that allows you to disguise your voice, disguise your where a phone call is coming from. You can add sounds into the background to make it sound like you're calling from a business when in fact you're not. So these types of tools are still out there and still flourishing. And so when we put that together with perhaps some of the riskier messaging, we have to understand that there's going to be a certain number of these loans that are impacted from this. And the last one I'll point out here is credit repair. Of course, you inundate the bureaus with letters saying that debt's not mine, and the bureau has to go and research that. So for a certain amount of time, there's a window there where there's no negative reporting, and then you go and apply for your loan, of course, and it sails through. And then once the bureaus investigate that, the negative reporting comes right back. This particular person, and I pulled this right off of Amazon, actually had to go and update their book. The original printing, I believe, was 2013, and so they had to come out with a new edition on it. So this is the environment we're operating in. Next slide, please. All right, and real quickly here, I'll just talk a little bit about money laundering versus mortgage fraud. And I like this graphic because it kind of integrates the two. Fraud you have there on the outsides. There's definitely something amiss with the deal, and it's operating outside of the normal course of business. Money laundering, on the other hand, exploits our business and our industry through the placement and layering of funds, the integration of those funds, and the loans perform. And you know, from a risk standpoint, when you're looking at that, you say, well, what's the problem with the loans performing? But that's facilitating the fraud that's going on there, or the criminal activity that's going on there. So it's in our industry today, that's probably as big a risk or as impactful a risk as the frauds that we see, which are outside of the normal processes. Okay, so what are we seeing? Let's take a look at the next slide. So we take all of the applications that run through the Fraud Guard tool, and we use the data there to aggregate that data to show us where there are certain risks with different types of properties, with different geographic areas, with different credit lines, and so on. And we publish this information. If you're familiar with the Mortgage Fraud Risk Report, it has been replaced with what we're calling the Loan Application Defect Index, and it's available at the hyperlink there in blue. Essentially, it's an interactive tool where you can go in and look at your particular areas of lending, your footprint, to see where you have risk and to see what types of loans are causing the biggest risk. You know, one of the things we keep an eye on is, are we in a refi or are we in a purchase market? With a purchase market, and we're transitioning into that now, you have more participants, you have a little bit less feel for the deal because they may or may not have been a customer before. You may have not been have seen these particular folks before. So there's more participants and more risk to that. So it's interesting to understand when you go out to our index to take a look at different tranches of loans and how are they performing, again, based on that incoming Fraud Guard loan submission. And so it's definitely worth your time to go out and take a look at that and kind of test drive it. You can change all of the attributes so that it fits your book of business, and you can see where those risks are across the country. Next slide, please. And so when we look at all of the Fraud Guard submissions, we see a natural aggregation of risk in certain areas. And this is a year-to-date snapshot, if you will. And we're seeing income and employment kind of leading the way there at a little bit more than 30%, followed by loan participants, identity, financing, and then property. And so you can kind of see how different risks are falling out. Again, these are based on submissions to the Fraud Guard tool, so they're not yet investigated. These are just potential areas of risk that are highlighted by the alerts within the FraudGuard system. Now, I wanted to take a quick second here to do a little poll to see what all you are seeing out there in the field. So do we have that poll queued up?
Sure, I'll give you the poll right now.
And so the reason I wanted to do this was because as I look at the FraudGuard submissions, I also look at some of the other things that we are engaged in, such as post-closing quality control. We look at the GSEs and what they've done. And so if you would there, I wouldn't mind just of the things that you're seeing within your own shop, do you agree or disagree that employment and income, loan participants, and identity are some of the higher risk factors there? So folks can go ahead and answer the poll, but we'll go back into the presentation and I'll take walk you through what we're seeing from the post-closing aspect, because First American also does their own post-closing quality control reviews. And so it's nice to see the correlation there. So do you want to go back to the presentation? All right. So this was from our post-closing QC results year to date. And so it's very interesting to me to look at this and kind of compare it with our FraudGuard results. And we see that income documentation was very high, sort of correlating to what we are seeing. Income calculation also high, application docs, assets. Now these areas, we'll find some correlation to what we see on the front end through FraudGuard. And so it's one way to sort of validate FraudGuard, but it's also another way to validate what we're finding on the back end. Lynn, I was wondering, do we have some results from that first poll?
Yeah, here you go.
Awesome. All right, so we see that there's definitely some agreement out there, which is great, And I appreciate that we are on the right path then with both FraudGuard and with the post-closing quality control. All right, so as we look at the post-closing QC results, kind of give me your sense on that. Are you seeing these same sorts of things with your post-closing quality control efforts? A little bit more spread out there, and as we'll see in a couple of other slides, the further downstream we go, the more we'll start to see some segmentation into different risk categories, because at different points along the life cycle of the mortgage loan, there's different nomenclature, and I'll show you what I mean there. But do we have a second poll to show? And so these are the main areas of fraud risk that we're seeing in post-closing: income documentation, assets, application documents. And so just let me know how that falls with your post-closing quality control. And we'll move on to the next slide. Are we able to move on to the next slide?
Hold on one second.
Sure.
Let me get. Okay, very well.
All right. So one of the other things that I like to do, just from a research standpoint, is take a look at what other quality control findings are we seeing out there from competitors and from peers. From the lenders that I talk to, quite often, peer benchmarking seems to be one of the key elements that folks are looking for. And so we do the same thing. We look at quality control findings from other providers, and we see that income and employment critical defects are pretty high here. We also see assets. And then, as I mentioned, there's some different segmentation or nomenclature there, and we're starting to talk about borrower eligibility. And I think there's some crossover where you'll see a borrower whose income doesn't qualify and it becomes an eligibility issue, or the income documents are bad and then there's an eligibility issue. So it gets a little bit fuzzier the farther out you look. I'm going to go to the next slide. And even as we go farther out, we see, Fannie Mae publishes what their critical defect rates are, and you see they have a number of different tranches of defect there. They're adding in, of course, the legal and regulatory compliance, which we're not capturing necessarily in the fraud guard up front. Same thing with the loan package documentation. But what I'm looking at this for is looking at those income and employment issues, looking at assets, looking at the appraisal and the property eligibility and those sorts of things. And we still see that there is correlation with what we were seeing on the front end. And if we extend this even one more step further out, next slide, and we look at completed investigations. Now, these are investigations that Fannie Mae either completed on their own or paid a third party to do. And you look at those, of course, it's farther out in time, but if you look at completed investigations from 2015 and 2014, this is where the nomenclature gets a little bit even farther pushed into liability issues. And so they're saying fully of 59% in 2015, 53% were attributed to liabilities that were falsified. This may be other real estate that's owned. It may be underreported liabilities. Remember, after the mortgage crisis, everybody was filing a 4506. And so the income falsifications went down for a time. Well, if you can't falsify your income up, you need to falsify your debts down. So it would make sense then that we would see liabilities as an issue. But look at occupancy. Very consistent from year to year, and it's also something that we see as a rising fraud trend. Lynn, I was wondering if you had some poll results from the second poll?
Sure, let me show them to you.
All right, okay, good. So it's good to see that. We're definitely on track, and I thank you all for participating in those polls. Let's talk a little bit about the upcoming fraud trends and types that are on the move. So if we go to the next slide, here are the areas across all of our business that we see as fraud types that are on the move. Of course, occupancy, definitely we see through fraud guard, we see that on the move. We also see the collateral misrep. We see undisclosed liabilities moving. From other investigations and from post-closing and from our peer benchmarking, we see that credit sharing and credit doctoring are also on the move. Identity misrepresentation, always a big one. It's the fastest growing white collar crime in America. Definitely on the move there. The qualification gap misrepresentations, we're always going to see a certain number of those. And those are always going to be strong, but I think we're well positioned to prevent losses due to those qualification gap misreps. Defalcations on the title side, we do see those. But collusion, number of folks working together, definitely saw this a lot on short sale transactions. Anytime an LLC was involved in a short sale transaction, that definitely raised the risk layers there. So it's something that we've been watching now for a while. Misdirected payments and misdirected payouts, you can't go through too many news stories today without seeing a business email compromise or wire fraud news story out there where funds were misdirected. We have also seen schemes where borrowers' regular monthly payments are misdirected. And so those are things that they're watching. Now, it's not to say that these are going to be the predominant fraud types. These are just the ones that we see on the move. Go to the next slide, please. So with red flag identification, I used to put together a pamphlet for our underwriters that showed all of the red flags that everyone needed to be aware of. But I think Fannie Mae and Freddie Mac and FinCEN, they do a really good job of putting out their own lists of red flags. And so today, when I'm speaking to underwriters, I generally redirect them to those sources because they're very comprehensive and they're good sources. But it definitely pays for underwriters, processors, appraisers to regularly go through some sort of red flag identification training, especially if you have different examples from your own workflow, from your own book of business, that you can show that, you know, here was the red flag, hopefully it was caught, and you know, it's a situation where it can be a teaching tool or a feedback loop that goes back into your process. Definitely worth investing in. Next slide, please. All right, so what can be done? And we know that fraud's not necessarily going to be getting any better. I had a slide in here that I can send along the percentages on, but essentially there's, in a recent poll, a certain number of high school seniors admitted to cheating. There's a certain number of folks who falsify resumes. And, you know, there was a study done on college seniors who had cheated on exams and weren't caught. And so all of those indicators are pointing towards it's not going to get any better. If there's an opportunity, again, that's what we can control, that access. If there's an opportunity to be defrauded, someone is going to take advantage of that. So your internal procedures have to be strong. They have to detail, you know, your specific concerns. They have to kind of guide you in the right direction, and they need to give the underwriters and processors and loan closers an ability to do something with the suspicions that they're seeing. In FraudGuard, we do a good job, I think, of putting in recommended actions that kind of guide an underwriter along. So if this particular alert fires, you know, there may be 2 or 3 or even 4 recommended actions to follow up on. When you do have participants and properties that you know are suspicious, you want to make sure you're looking for the linkages between participants. And so if you find a particular realtor or settlement agent and so on, you know, that was involved in a couple of deals that were bad, let's take a look at some of the rest of those deals, you know, and know what those red flags would be presenting as. And again, be aware of the purchase market conditions. We are fully, or more or less fully, transitioned into a purchase market now. So again, more participants, more variables, and there's going to be a correspondingly higher level of critical scores. Next slide. From the fraud investigation aspect, there's a lot of good open source intelligence out there, but the main thing I think we need to be aware of is consortium data out there. The FraudGuard database has about 30 million loan submissions out there in it. So chances are, if we have a serial type of fraud, we have seen that participant or that scheme or that property before. And so I use the term tagging elephants. And if you ever watch, I grew up watching nature shows, but if you ever watch a show about how to count the elephants roaming around the Serengeti, you throw a radio collar on them and you track them. Same thing here. When you identify a fraudulent participant or a legacy fraud property, let's get those onto shared and linked watch lists so that you don't run into that same issue with that participant or that property again. From the subscription services, fraud investigators and your senior level people should have access to Lexis, TLO. The ability to unlock social media, again, Craigslist is where a lot of fraud schemes are at least taught and perpetrated. And so it's important for those who are charged with protecting the bank's charter or protecting the organization have the ability to do that and look at those different sources. Next slide. And then I'll leave you with this, but where fraud prevention is going and where risk mitigation is going is moving past a reactive strategy and looking at something on a predictive level, predictive analytics, looking at that. And to understand that, you have to look at the behavioral analytics of fraud cases. And there's a recommendation there from the government to adopt the behavior-based modeling. And these type of things are definitely looked at from our perspective, and we try and incorporate that within the tools that we are creating. Again, you have to be able to identify what the hallmarks of a good and bad loan look like, and that's where the fraud guard submission data and things like the loan application defect index really help us out there. So that is my part of the presentation, and certainly we could go into great depth on fraud, but I will transition this now over to the product manager for Fraud Guard, Jennifer Minori.
Thanks, Matt. Really appreciate that. Great summary. April or Lynn, if you don't mind advancing to the next slide. Thank you. So for those of you who are not familiar with the Fraud Guard tool, like its name, it was originally created as a first-generation fraud protection and prevention tool, but really it's evolved into many other things. So if you think about maybe a loan quality type platform with verifications as part of its capabilities, and also a screening tool for data integrity issues. We continue to look for some of the fraud schemes as outlined in Matt's previous slides, but it's much more than just a fraud detection tool. Next slide, please. So the best way to really interact with the tool is obviously sending us a 1003 application through various formats such as LendingQB. We also, you can access the tool through the UI, and we also have batch loading capabilities. So the point here really is that, the 1003 drives the actual submission, and the more data points that you provide through that submission, the more robust the findings will be. So Fraud Guard today, I think, accepts about 13 different data elements as the default. So just to submit the loan, there's 13 data elements that we require. But we accept well over 500 data entry points as well. So if you'd advance to the next slide, please. There are three buckets that we categorize the tool into, and one is the borrower, and we're looking for different types of discrepancy related to the borrower, whether it be income discrepancies or employment issues, undisclosed liabilities, or even conflict of interest between the borrower and other parties within the loan. We also do a thorough check on all participants within the loan. As Matt mentioned, going into a purchase market, more and more participants are involved and touch the loan. We actually collect up to 125 counterparties. And we check each one of those names against all industry exclusionary lists. And if the customer provides their own internal list, we will also check the names against those lists as well. We also validate that the participants, such as the loan officer or the appraiser, has an active license at the time of application as well. We also do a full analysis on the property, looking for issues related to the subject property, including flipping issues or short sales. We also look for FEMA disaster tags as well. And we do a full analysis on the market. Next slide, please. The Fraud Guard is an alert-based scoring system, and there's really 3 different types of alerts that are part of the tool. First, we have what we call flex alerts. So this is sort of our consortium data. As Matt mentioned, we have well over 30 million loan applications in our system. And we leverage those data points to look for trends, but also look for discrepancies between the application that you're submitting against other loans within our system, generally within the last 6 to 12 months. One example of that might be there's an income discrepancy between what the borrower is reporting today and what they reported 3 months ago. We also analyze the input data, not only for data integrity issues, but we're also looking for parties that in the transaction that may have some sort of relationship or a non-arm's length transaction. And then Fraud Guard also, beyond just the application and the input data, we of course are tied into many different vendors, and we'll get into that in just a minute. But we blast out to, 20 different vendors and pull in all of these data assets and cross-reference them to see if we see any kind of discrepancies between the different vendors as well. The scoring breakdown or the threshold is from 0 to 400 critical risk, 401 to 600 moderate, and 601 to 1,000 is a low risk score. Many of our customers use the scoring cutoff as a way to identify what groups of loans they want to review. Next slide, please. So the base product, Fraud Guard, is made up of the top row here. So we have identity and occupancy analysis, the AVM, industry watch list, and income, and so on. But we also have add-on modules that can be included as part of the core product. And as you start to add or plug these different modules into the product, it actually will layer in or create a more robust set of findings. One of our most popular modules is the ownership and occupancy piece. And that's really looking to see what other properties the borrower may own and have not disclosed. It'll also look to see what properties they own that are going into foreclosure or borrower-involved flips. We also have platform modules, and these are really, third-party supported modules that are part of verification. So the work number, obviously, 4506, these are all very important as part of day one certainty. But we also have an undisclosed debt monitoring piece, too, that will actually monitor the borrower's debt over the course of the loan application. Next slide, please. Oh, and I guess that's it for me. That was short. So I'm going to turn it over to Mike Whalen. He is our Senior Director of Implementation, and he's going to walk you through just the implementation piece. Mike?
Thank you, Jen. Appreciate it.
Mm-hmm.
So real quick, we're going to look at the Fraud Guard loan summary. This is what you'll see. It describes, gives you a high-level overview over your scores, which variances have been identified as an issue. You can access your watch list results there. It just gives you a general loan summary. Next slide, please. This is the variance breakdown. You can see that within each variance, it'll let you know whether or not it's a high impact, and that's how it affects the score that Jen was speaking about. There's a description, and then it lists each of the pieces who was identified and what we recommend to correct the action. And then below that, you'll see that there is evidence that you can, that justifies the alert. You can also, at this point, you can add a comment. You can clear the alert on there as well. That will kind of raise the score back up, act as if that alert did not happen. Next screen, please. within our property overview, you will see all the pieces, that we see. This is a full report. It's interactive. We have all the alerts will be listed here. You'll be able to see the assessed land value and the assessed improved value, all the different characteristics of the subject property, as well as the estimated value.
And Mike, if you don't mind, I'm just going to jump in real quick. So the property overview piece is going back to my previous slide where I had the 3 buckets, the borrower, participant, and the property section. This is kind of a detailed look at what we're analyzing as part of that property overview. So if you're familiar with First American, obviously we're a title company and we sit on top of all of this title plant data, which we have digitalized and put into a database. So all of the recording, the assets, lien data, mortgages, all of that information is part of this property overview report. So if you take a look at the second bullet there, it says that we have premium data assets. Our coverage really is 99% assessor data and 94% deeds and mortgages. Really, that is, there is nothing that compares in the market. So we feel very confident about our ability to identify issues as they come in and our refresh rate. Something else to point out is that we went through an exercise of revamping this tool late last year, and we retired different legacy rules that have been part of the FrogGuard tool historically that really, were important during, the recession and things like that. But we've revamped them and now reduced our false positive rates too. Something else to point out is that it is customizable. You can enable or disable the AVM as part of this product. Next slide, please. Okay, there you go, Mike. I'll hand it over to you now.
Thank you, Jen. Okay, this is just going to be a quick. I know that we're kind of running short on time, and we want to leave time for questions. So this is just going to be a quick overview how you would interact and order the FrogGuard through the LendingQB application. It's a pretty simple process. Basically, once your loan is ready, you will just select the First American FrogGuard directly from the export menu. All right, next slide. What you'll see then is you'll see a status page. It kind of shows you that it's processing. At this point, the loan data is being transmitted over to FrogGuard. We're scoring it at this point, and we're going to send back the response. Next page, please. When the response comes back, you'll see a loan summary there. It'll list the scores. It'll list the alerts. And at this point, you can also change the alerts just like you could through the FrogGuard UI. And we're going to see that on the next screen. So basically what you would, once you review the report, review the alerts, and deem that this is something that you should clear, you would add your comments, you would select your findings to cleared, and you could do that to each individual alert or to a whole group. For instance, if they're all the identity alerts, you can clear them all at one time. Next screen, please. Through here, you would add a comment, enter your name, and this would go for all the alerts within that group. It would enter there. Just hit submit. Next screen, please. Once you are finished clearing all the alerts, you will just hit the CAS rescore button. Next screen. At that point, your loan is rescored. You can view the results to the summary page again. Once you are complete, you'll be able to go to the eDoc section. You can pull up by viewing the PDF. You can view the full summary page just like you saw within the FrogGuard UI. Next screen. And that's the full PDF right there. And that is, that's the full integration. It's very simple, it's interactive, and it's easy to use. Next slide. So if there's anyone that's interested and using Fraud Guard through LendingQB, just you can contact the support number or use the support email address. And both of those will be supplied afterwards as well.
All right, terrific. Thank you, guys. Really appreciate it. So, want to just go through just a couple of questions that that came up, and I think these may be more towards Matt. I'm not sure, but Emily is asking, does the exclusionary list include the Freddie Mac exclusionary list?
It does indeed. All you need to do is supply us your Freddie Mac seller servicer number.
Okay.
Jen, did you have something?
No, you answered it, Matt.
Okay, good. And then Emily also asked, would the AVM be considered an appraisal valuation in terms of needing to provide a copy to the borrower?
Most of our lenders, if they're concerned about not providing it, they can suppress the value, but still receive the data. And I'll defer to Jen on how all of that works.
That is correct, Matt. So, you know, many of our customers do disable the AVM itself, but continue to get an alert or a variance that will tell you that there's a X% difference between a calculated value, which we would not show on the report, and the input value. So you would still get some sort of alert to tell you to take action if the variance is, you know, 15% or greater. But then there's other customers who use the full AVM and they get the values and use the alerts as well. So one thing I did not really mention earlier was that Fraud Guard is a very customizable tool. So customers can turn on, turn off variances, they can adjust pieces of data, and they can also tweak the impact of different alerts that would affect the score. So.
Okay, great. And then one last, well, actually two questions. One last question from Emily. She asks, can the modules be added individually?
So the platform piece of the Fraud Guard slide, if we went back to that slide, if you don't mind going back, Lynn. Almost there. Two more, I think. There we go. Oh, one more. Go back one. There we go. Okay. So the optional modules in blue, those are part of the Fraud Guard solution. What I mean by that is you have to run a Fraud Guard in order to get to these modules. They will be included in the Fraud Guard report. The platform modules at the bottom, we have standalone solutions for most of these, meaning you don't necessarily have to go through Fraud Guard to get the work number, or I'm sorry, the 4506 or the SSN validation. So hopefully that answers your question. Is there a follow-up question to that?
No, not from Emily. There is one more question, though.
Okay.
And I don't know if you can answer this, but what is the cost for the service? Or more appropriately, who can they ask to get cost for the service?
So what we'll do is I will, well, let's see. I think the best way to handle that would be to call the customer service number here, and they can get that information. Unless Celine, if you have a better contact. I don't know if Celine is able to.
Well,
okay.
actually,
okay.
I yes. Anyhow, yeah. So you know, this is a good first step. I mean, obviously, you know, for all of our LendingQB customers, I mean, you have your account managers. You can reach out to them, and they can certainly assist you with this as well. Just to let you guys know, you know, I got a couple questions on this, but yes, as usual, we will be providing a copy of the slide deck and a copy of the recording. You know, once this webinar is done, you know, give us maybe a day or two to get it prepared. So that will be going out to you and to all the registrants for this webinar. Okay, very good. And that's all the questions that I see, unless anyone wants to submit any few last questions before we end this webinar. But if not, I mean, I certainly do want to thank everyone. I want to thank Matt, Jen, and Mike, and April, who was actually driving the slide deck, and Celine as well. And again, you know, we at LendingQB, we're very pleased to finally have this service added. I know it's we've had quite a few of our clients asking for this product to be added, and it did take a little while, but we got there. So we're happy to have finally completed this integration with First American, and we're looking forward to having other First American products integrated to the system as well. Sometime in the future, I suspect probably by within the next 4 quarters, we should have a whole range of additional products available from First American.
Yep.
All right, very good. Any last comments, you guys? Anything that you want to, any parting thoughts to the audience?
I just wanted to, just to expand on what you said, I just wanted to say look for the PreProtect integration through LendingQB to be coming up shortly. So that's gonna be another fun piece there.
All right, terrific. Well, thank you so much, guys. I really appreciate the time that you spent preparing for this, and you know, I appreciate everyone for attending the webinar. Again, we will be sending out an email to everyone with a link to the slide deck and to a recording, as well as with contact information for how to sign up for FraudGuard. All right. Well, if nothing else, thanks so much, you guys, and we'll be talking to everyone soon.